Good morning, traders. I'm Dan Pavilonis. This is John Kennedy, Senior Brokers here in Chicago at RJO Futures. We're here to talk today about next week's data. We have a big week next week. Monday's number, durable goods, Tuesday, consumer confidence, and Thursday, GDP. I'm going to talk a little bit about interest rates, the way things have been going. It looks like we're in a very bearish trend as far as futures go, 10-year notes, 30-year bonds, and I think that continuation is going to continue. The way that things are looking, if we look at durable goods, for instance, on Monday, the previous number was 4.2. This number comes out at 7:30. The measurement is large merchandise, large automobiles, appliances, stuff like that. I think that number is getting a little bit better. I also think that Tuesday's consumer confidence, consumers gaining confidence. The previous was 8.3. That number comes out at 9 o'clock. And I don't think that these numbers coming out Monday and Tuesday, I don't think they're going to be major market movers, but I think it's going to give the Fed a little bit of extra breathing room, if you will, to continue with slowing down, or what the thought is to slow down on QE. We're going to find out more about that in September, but if we look at all the way to Thursday's GDP number that comes out at 7:30, the previous was 1.1%. Again, I think that's going to give a lot of headroom for interest rates to continue to go higher, and a lot less necessity for the Fed to actually have to purchase treasuries. Now, remember, we're still coming off of two wars here, coming off of Afghanistan and out of the Middle East, and I think there's less reason to sell treasuries, less reason for the banks to go in there and buy treasuries. And if the Fed slows down because GDP is getting better and everything else, I think that gives a lot of opportunity for interest rates to go up. And banks that were buying treasuries before and other investors that were buying treasuries before are going to have to go to secondary markets with higher interest rates. So all in all, I think interest rates continue to go higher. And I think it's an opportunity in not only the interest rates, but the dollar index and even stocks. John, what do you think?
I'm in total agreement with what you mentioned. I mean, the durable goods, consumer confidence are key numbers, but it's just going to be confirmation for the Fed in their expectations to start tapering on the QE3. The GDP obviously has performed less than stellar coming up to now. It was 1.1 Q1, 1.7 Q2. That said, the economic numbers here over the past week and even today, with leading economic indicators performing better than expectations, some global manufacturing numbers coming in well, have pointed to an improved economic outlook. The stock market is going to be focused on this because a good number, which they're expecting in the GDP at about 2.3, would confirm the Fed's statement all along that they intend sooner before later to begin to take their foot off the gas, so to speak, and apply the brake on the QE3. That obviously has pushed the stock market much higher, even though we've seen 6-week low in the S&P yesterday. It's been really the fuel to the fire. So obviously, if that GDP comes out in line with expectations or beats it, you're going to see in September, as Dan said, more details in how the Fed intends to start halting the QE3 process and eventually drawing some of this excess liquidity out of the market. This initially will be bearish on the stock market. In the long run, we need to see how it plays out. As we saw with the FOMC minutes yesterday, there was a knee-jerk reaction when the statement came out, and the market ended up turning actually twice. So initially, if this number comes in line, as I said, you may see a sell-off in the stocks. That's going to hit the other markets as well. Your energies, your metals, safe haven and gold and silver, things like crude oil are going to be more of a expectation of future demand type market. So really, it's just, it's traders and the Fed. We want to see if we have continued shorter term, or in the short term here, we've had some economic improvement. If we see continuation of that, then we're going to see some more details on tapering of the Fed, and that's really the name of the game right now. People reacting really day to day, report to report, in expectation of that taking place. Definitely keep tabs on us, Twitter, Facebook, on our websites, RJO Futures, rjobrian.com. We update our materials daily. We're here to help. Reach out to Dan or myself if you have any questions. Keep in mind that futures and options involve substantial risk and may not be suitable for all investors. Until the next time, have a great day and good luck with the trading.